Hey, it's InvestorZilla here. I'm talking about a stock that I spent a ton of time researching. That stock is Asana. Now, I have used Asana professionally, but that was about 4 years ago when I owned a consulting company, and I absolutely loved it then. I've been watching Asana for a few months now, but I really wanted to wait until they reported earnings for Q4 before I really did the deep dive. Before we get going, if you just don't mind taking a minute to give me a thumbs up and subscribe and leave any constructive feedback in the comments below. As always, I am looking forward to hear whether you are investing into Asana and what you think of the work that I've done here. So let's go. Looking at the investor relations page, Asana is described as a leading work management platform that helps teams orchestrate their work from daily tasks to strategic initiatives. Asana adds structure to unstructured work, creating clarity, transparency, and accountability to everyone within an organization, team leads, executives, and so on. They understand, they help everyone understand who's doing what, by when, and I guess a good way to put that, in short, it's a cloud-based project management suite. Its largest competitor is most likely Atlassian with its offering, in particular being Jira. Now, I am fascinated how they kind of call out the work graph data model. This is something I don't think I have a full understanding of yet, but I am continuing to explore this, and I will make another video if this is something that's groundbreaking, is what they like to make it sound here. Now, it has tools like the traditional Kanban boards. If you have worked in any sort of tool like Jira, Trello, for example, you would be familiar with these. These are incredibly popular, especially in software engineering, things like DevOps, or really like marketing or any other task-based projects. I do have to say, I really like the way these boards look as I play with them. They also have a high amount of configuration that you can do. So you can allow like and build boards to work with the way your teams like to work. Now, integrations are also incredibly important. As someone that has purchased software like this and for companies in the past, what they integrate into matters a ton. Now, simple things like hooking into a single sign-on or document management or like Slack are just incredible, and it makes it really attractive. But with 100+ integrations, I have to believe some of these are being maintained by partners or the community itself because they only have 1,050 people at the company right now, and building an integration takes a lot of effort. Now, let's take a look at the logos that the company has on their website. Now, they have Google, Zappos, Uber, Slack, PayPal, and so many other large companies that are listed here. It's actually mind-blowing to see that number 80,000 at the bottom here. Now, that's across the globe. This is way more massive than I had actually thought. I also don't think we understand the scale of use in any of these organizations here. For example, Google and Deloitte and Spotify and Uber and Slack, all of these could be just a small section of that overall company. And if they can get into those companies and expand their offering and like cross more of Google's businesses and more of, PayPal's businesses, they can actually increase revenue quite immensely. So pricing, there's really basic, premium, business, and enterprise. It appears that the premium is the most popular. And it's probably geared to smaller businesses like my consulting business where I had like 30 employees. If you have a business with 30 employees, you're looking at, $330 a month or, a little bit under 4,000 a year. The price jump for the business product line is actually pretty substantial. But based on the list of additional features, it may actually be super necessary for some organizations. Now we have no idea the enterprise pricing, but I bet it is more than 24.99, or maybe because there's so many people, maybe it's somewhere between premium and business. Don't really know, but I can tell you, having been in large companies, SAML is probably a must for any large company that I can think of So if you get to a company that's got, 500, maybe even 400, 500, 600 people, more than likely they're going to be going down the enterprise route. So doing a quick bit of math, if the average amount that a user pays to be on Asana is about 15 bucks a month, if they could get 5 million paying users, that would equate to about $900 million in revenue. Now, the leadership team, as always, I'm only going to dig into two of these individuals. The CEO, Dustin Moskovich, and the head of business, Chris Farinacci. You should take a moment to look into all of these leadership members, as well as their absolute stellar board this company has put together. Now, Dustin is the co-founder and CEO of Asana. As Asana's CEO, he is dedicated to creating a product that helps the world's teams collaborate effortlessly, in addition to leading the company's award-winning culture. Now, I love a company with a good culture. Let's see how this checks out when we dig into this more later. Dustin co-founded Facebook and served as the company's first CTO and VP of engineering. That is huge. His experience working at Facebook in that startup is just enormous for Asana. He also majored in economics at Harvard prior to joining FB in 2004. Dang, like what an amazing background for a CEO. Looking at his LinkedIn, nothing really surprising here. I do like that he is part of the Open philanthropy project as well as a board member for Vicarious AI. It really seems like he is geared towards leaving the earth better than where he found it, and I love his focus on that. The big one, of course, is that he's a co-founder of Facebook, and that it looks like he left Facebook to actually found Asana. Asana has been around 13 years, and what's really interesting to me is I had no idea this company had been around that long. I was thinking maybe if I had to guess, 9 years, 8 years, so probably closer to, 9 to 7 year range. Now, Chris, he's the head of business and leads the company's business growth and go-to-market efforts, including sales, marketing, biz dev, and customer operations. Chris has a ton of responsibility. Before joining Asana, Chris led global marketing for Google's enterprise and education businesses, responsible for helping scale it to a multi-billion-dollar business. Prior to Google, he held a variety of leadership positions, such as the CMO of Hara, VP of Application Marketing at Oracle, and Senior VP of Global Marketing at Agile Software. Looking at his LinkedIn, you can see that he joined Asana in 2015. He is not an original member, but he's been there, 5 years, 7 months, according to this. And it's also some other interesting things that he's got listed there, like he's on the Area 1 security board. That's pretty cool. I'd have to look in to see what exactly that is. And the advisor for Y Combinator Continuity, which means he works a lot with different startups. No other major surprises here, but it does seem like he has a very strong background in marketing, which translates very well to what he's responsible for at Asana, rather. Now, culture. Holy cow. This is one of the most insanely rated Glassdoor profiles I have literally ever seen. One thing I can tell you is if you have a happy and empowered team, they are going to move faster and deliver higher quality work. 99% of people recommend this company to a friend, and 100% of the reviews approve of Dustin, their CEO. For the amount of growth this company has had and going public, I am just blown away that they are able to keep this kind of culture, and this type of Glassdoor profile will help them recruit. Now, speaking of recruiting, they have 186 positions listed on their website as of March 2021. This company has a little over 1,000 employees. So think about the percentage of growth here. That is just mind blowing. That is nearing 20% of what they currently have staffed as open positions. Now, I love data, and Asana is poised to really capitalize on the huge amount of data on their platform. Look at the positions listed here: data scientist across San Fran and New York, data engineering, data infrastructure, data marketing. These really have me excited as someone that just has a deep passion for data science. And what kind of markets can this open up for Asana beyond what they are already in? I do find it interesting that none of these positions are remote, which means recruiting is going to be a bit more difficult for Asana. So that might stifle some of their growth. Think about the cost of living in San Francisco, paired with the fact that everyone has been working from home for the last year. I'd be curious to see if they list these positions at remote or are open to hiring remote for some of these positions as we go forward. Now, there are just a ton of categories that this company's hiring in. Just to name a few, we see infrastructure, product management, product engineering, finance, marketing, product and design, people, operations, IT, legal, and more. The key here is, can the company actually add this many people, which looks like in a not remote capability, not remote role, without impacting its culture? And paired with the fact that this company needs to grow its numbers, can it also keep the public markets happy? Because cost control is eventually going to have to kick in, and hiring will have to slow. I will definitely be keeping an eye on their hiring numbers as well as their culture and be digging into this as we go forward. But I am super excited by the amount of growth that they're having. Now, how about their recent financial results? This is a screenshot from the public statement. And they say, we closed out the fiscal year with a growth rate of 59%. And our business is as strong as ever. Hot diggity dog. That is some amazing growth in 1 year. They also say we now have 93,000 paying customers and 1.5 million paid users as of fiscal year end. These are numbers that I am going to monitor over time to see how they grow. They also said customers spending 50,000 or more grew 90% year over year. That's almost doubling their large customers. That's another metric we should keep an eye on. Revenue from our current top 10 customers more than tripled in Q4 versus the previous year. This means that they are able to land a customer and grow the revenue. And this is massive. I can't emphasize this enough. This is massive for the company to be able to hit the numbers that I truly think it can. Now, Twitter chose Asana in Q4 as their work management platform for their experience team, which includes design, research, product engineering. Now, this is a massive logo. It's a massive ad for Asana, and it will be interesting to see if we can determine how this move from for Twitter to Asana actually goes. From what I can tell, Twitter was previously using Jira, and Jira has been so embedded in a lot of the engineering teams I have worked with that I feel like this might be a bit of a learning curve at first. I'm hoping to check back with some of the folks I know at Twitter and just see how this goes over time. Now, non-GAAP results. Gross margins increased 1%, up from 87% a year ago. R&D was 30.6 million or 45% of revenue. They say we continue to invest heavily to fuel innovation at a high velocity. You know, it's incredible to me that the company is investing this heavily into R&D, and it gives me a lot of hope that they aren't going to be letting up the gas for gaining market share. Now, the company also invested 49.2 million in sales and marketing, which is a ton of money. It's going to be interesting to watch these numbers over time. Operation loss was 34.8 million and operating loss margin was 51%. Net loss was 35 million or 22 cents per share. These numbers tell me that the company is still expecting a ton, I mean a ton of growth. Now, how about the outlook for 2022? What they say is Q1 revenues are expected to be in the range of 69.5 million to 70.5 million, with growth rates of 46 to 48%. Now, any company that is growing 40% quarter over quarter is in like super fast growth beast mode. They do say they will have a loss per share of 0.27 to 0.26 cents per share. We expect revenue to be 309 million to 314 million, representing a growth rate of 36 to 38%. Now, I think they can actually beat these numbers. I think year over year they may actually be closer to 330 million. and Q1 will be closer to 72 million. And this is just based on the numbers I'm running. So just take a quick look at the income statement. I won't talk too much about it here, but it actually is scary, or it might scare a lot of people, that the company's net loss increased by $100 million from 2020 to 2021. Now you can see a large part of that is from increased operating expenses, which usually come from the added expenses of just becoming a public company. Now, the balance sheet, I couldn't find an up-to-date one at the time that I built this presentation, but in the earnings report, the company stated at the end of Q4, they have approximately $405 million in cash, marketable securities, and long-term investments. The question to me is, can this company temper the losses while gaining revenue? I absolutely think the answer to this is yes, but the team has to execute. And they have enough cash on the balance sheet that they have time to figure it out. But honestly, they can't keep losing 200 million a year. And I'm thinking in 2021, I'm hoping the company tempers its losses, less than 200 million, and that maybe they can reach profitability in 3 to 5 years. But we will see. Now, the stock price, the company has a market cap here of $5.4 billion. Now, this will definitely be changed by the time you watch this. I can't predict where it will go in the short term, but I will say like a $5 billion market cap for this company is a very reasonable price. And I'm actually checking it again as I'm recording, and the share price is actually under $33 a share. So just keep that in mind as you're going forward. Like, what value do you feel this company has with its current state compared with its growth potential, and pick a price that you feel comfortable with. Now, I just have this question up here, enlarged question. Um, but can this company get to $1 billion in 5 years? I think it can. You know, if I had to put like a ratio on that, I'm thinking there's probably a 60% chance, maybe 70% chance that it hits 1 billion or darn close to 1 billion in 5 years. So take a look at these numbers. Let's just say next year they do 300, 350, and the following year they do 500 million, then 650, then maybe they slow down a little bit and they do 800, and then maybe they get to 950. 950 in 5 years with growth rates of 30%. So that means, less than what is expected, 24%, 23%, and 27, or in 17% rather, would get us to very close to 1 billion in revenue. Now, I think this company can 4x its market cap, if not even more, maybe 5x by 2026, if it can execute and hit that near $1 billion in revenue. This company could easily be a $20 billion company. So, what do I think about this stock? Like, I like this stock a lot. I am super bullish on this stock. And the numbers here actually have changed as I've bought more since I've actually made this presentation. But anywhere around that $5 billion market cap, if it's under six, if it's under five, I am super buying when I can, when I have the money. As soon as I get money to buy, like I'm putting it into the stock. I really want to get this stock to five figures over the next 30 to 45 days. A couple points to leave you with here. Like, I've actually got closer to 100 shares now, but I still want more, and I'm tempted to move some of my other positions around, but I usually don't sell stocks. I usually buy and hold for long term, but I am super bullish on this company. Another point is Atlassian has 1.5 billion in revenue and is valued at 58 billion. So could Asana be a $58 billion company one day? Now, Atlassian has a lot of different products. Asana may get to that point, but I don't see that happening in 5 years. If that were to happen and this company were to get into the 30 to 40 to $50 billion range, the returns on that are just incredible. And the leadership team, the board members, the culture, like everything in this company just tells me that this company is going to be successful. I will revisit this though, because as they grow, as the markets change, as the world gets back to normal, I may start seeing red flags that make me not as bullish on this company. And if I do see those, I'll share that with you in another video. But for the time being, I'm buying, and I would love to know what you think of Asana. Is this a stock that's even on your radar? Are you even considering this as a stock to buy into? Until next time, invest safely. Have a great night. Cheers.